Well, I'm definitely not creating any friends here. That's for sure. I got an email from a friend actually who was in the business, but he was chastising me for my. He's a good guy, I like this guy, but he was chastising, or a text he sent me about my take on various investment firms and the exorbitant fees they charge, and he threw back. He threw back in the value added asset location as a way to essentially justify the fees. It wasn't like, he's a good guy. I know him. I got no problem getting paid for what you do, none whatsoever. His firm actually does more than most other firms out there. I get that, but I still had a chuckle because the facts are, there's no justification, my friends, at all why an investment guy should get paid 5, 10, or 15 times more than a tax guy. None whatsoever. Watching what my wife does working for her CPA firm with the K-1s, the various schedules, the various tax returns, the various filings, the various calling the states, calling the IRS relative to what an investment manager is, the difference between night and day. And yet the irony of it all is the investment manager makes a hell of a lot more from an income perspective than the tax firm. Is absolutely no, you cannot, that's not justifiable. It's not. It's only justifiable by the ignorance of the clients, and that's all. And the ignorance doesn't mean they're stupid, it just means they don't know. And that's the only way. But the ignorance is being lifted, my friends. So the veil of ignorance is slowly but surely being lifted, which means there's a lesson or a smaller and smaller group of people who are willing to pay the exorbitant fees of investment managers. They just are. And now what happens is you have more and more financial planners, financial advisors going after this fewer and fewer select group of people willing to pay these exorbitant fees, and it's like musical chairs. At some point, he's got one guy sitting in the chair with 8 people hovering over him saying, invest with me, invest with me. And if you ever seen those Fisher Investments commercials where they have, you know, a guy sitting in the chair and another guy sitting in a chair, and they say, is it any wonder why the vast majority of our clients come from other firms? Well, because the vast majority of your clients come from other firms, because the vast majority of people are not willing to pay those fees to begin with to even look at Fisher. It's, you know, they're basically renting money. We're going from Fisher to here to there to there to there. Very, very few people are going from Vanguard to Fisher. I guarantee they got some. You know, I assure you that, because even when I was at USAA, at some point people say, you know, I don't want to do this anymore. I'm going to turn it over to a professional. But that's not, you can't build a business on that model. It's just not sustainable. It's not sustainable with the way the investment industry is charging. It's just not. Again, if you're using a simple $1 million account, if you got $1 million account, you got 500,000 in IRA and 500,000 in a taxable account, you're paying what's that on 1%? What's that, $10,000 a year? And you're only paying your accountant in that regard, what, maybe 1,000, maybe 2,000 at most. And the accountant's doing a hell of a lot more work that's more valuable than this guy over here, because this guy is actually hurting value because investment fees hurt returns. I mean, it's not rocket science. Investment fees hurt returns. Thus, investment fees destroy value. It's not just old Josh on his back porch here in North Fulton County, Georgia, spouting off this. This is just, everybody knows this now. It's just, but we're bringing other things to the table. I'm like, then freaking charge for the other things. Charge for the other things. But don't charge for investment management, because investment management hurts value. And look, I want my friends in the industry to get paid. And they will get paid when they see that when the veil that they are their own ignorance, like, we got to get paid on investment management because no one's going to pay for our services otherwise. I'm telling you, that's simply not true. I know that for a fact how many people request my services. I know for a fact it's not true. People are willing to pay for services, but they're not willing to pay for something that destroys value. I just wish the investment industry would get this, because they're saying it's the only way people are willing to pay. It's just not. I mean, you're having a smaller and smaller segment of the population that's being solicited by a larger and larger group of financial advisors. It's just inherently is going to be a race to the bottom. But you have this huge group of people over here that are more than willing to pay for value-added financial planning, tax planning, estate planning services. They just don't want to pay for investment management, and they shouldn't. So not only are you excluding the vast majority of consumers out there, but you're competing in a huge pond full of other investment management shark firms. There's so much more competition over here for a fewer group of people who will pay you, and yet if you go over here, there's so much less competition for a huge group of people who are willing to pay you. I And the thing that drives me up the wall is not only are you destroying value by charging for investment fees, not only can you not justify it, can't be justified. There's just no way around it. You cannot justify a $10,000, $20,000 investment management fee. You can't. You just can't, because the accountants aren't getting that charge. The lawyers aren't getting that fee. And I'm sorry to say, the lawyers who do the estate planning, the accountants who do the annual to include estimated taxes, the extensions, all that, the accountants do more work. The lawyers who do the estate planning are doing more valuable work than some guy who's saying, we're going to choose this investments for you, because again, there's just no value there. So inherently, they are playing a deeper role than an investment management guy is, and yet they're not charging as much. Those days are coming to an end, and yet you have this huge swath of people over here, huge, who say, I don't want to pay to lose value, but I'm willing to pay, $1,000, $2,000, $5,000, whatever it is for a financial plan, to ensure that I'm on the right track, minimize my taxes, making sure my estate's in order, making sure my asset allocation is in order, all that stuff. And I can do that once a year, twice a year, once a year, maybe every 3 years, whatever it is. But the issue is that is sustainable. This other way you're doing it is not. And that's why I'm not making any friends, because I'm calling them out. The days of being able to charge assets under management and get exorbitant fees, and these are exorbitant fees, my friends. There's no two ways around it. I'm just telling you right now, these are exorbitant fees. And so I'm begging the people in my business, who are wonderful people, helping people immensely. I'm begging them to take those blinders off and look at the light. The light is over here. The light is calling you to say, help more people and make a good income doing it. No, you're not going to make $1 million a year charging $3,000 annual financial planning fees. But if you're making $1 million a year at just doing investment management, I'll let you decide if that's actually worth what somebody's paying for it, because it's not. It's not. But you are making good money doing financial planning for these people who need it. And there's so many more that once you start doing it, you'll see that your value will be extraordinarily high. The level of feeling of what your services you're doing is extraordinarily high. And you have this incredible, just a huge group of clients that are willing, ready, and able to pay you a fee. It's nuts, man. And you can have a good career and make a decent living. You're never going to be super duper wealthy, and you should not want to be in that regard. Because financial planning as a service should not be about getting wealthy. It should be about serving people and having a good income, for sure. And wealth is always in the eye of the beholder anyway. What's wealthy to you may not be wealthy to me. I don't know. But some people making $100,000 a year is extraordinarily wealthy. And doing that, sitting on your back porch, working with a couple of people a month, doing YouTube channels and stuff like that, that's not a bad life, man. It's certainly a hell of a lot better than knowing, I'm always got to fight to defend my fees, fight to defend my fees, fight to defend my fees. Look, I've been there. And it sucks, because there's a fight you're going to lose. You have to, because the mathematics are against it. You're going to lose that fight. So open up, take the blinders off, look at the light, go to the light, and recognize there's this huge group of people who are desperate for your services. They're willing to pay a fee. They don't want to destroy value by paying for investment management when they get no value added. And you can't use asset allocation or asset location to justify value added, to justify a $10,000 a year fee. You can't use Vanguard study, which says alpha, what do they call it? Alpha, Bravo, no, they call it something, Gamma, or I think it's what they call it. There's a Gamma that advisors add by tax preparation or tax planning. What else they say? Asset location. You can't use that. There's no justification to say, I can give you 3% rate of return more than what you can get on your own because I'm doing all this other stuff. It's silly. I get it. The industry is desperate to give some sort of level of value other than an investment management fee. Well, if you're truly doing that, then charge. You can charge whatever you want. You can say, look, I think with my planning capacity, I'll increase your net worth by, I don't know how you want to do it, but you can certainly say, I think with my planning skill set, your net worth will be improved over what you could do on your own by a significant amount. Thus, it'll be worth to pay $5,000 a year. However you want to do it. I don't know. But that is value added. But if you're thinking that's a value added and I'm going to charge 1% a year on investments under management, the two things are completely mutually exclusive. They're just, because you're killing value here, even if you're adding a little bit of value here, which you are, I grant you, you're adding a little bit of value here, but you're killing more value here. So it's a net loss to the consumer. There's no other way around that. You're paying them $10,000, $15,000 a year for this investment management fee, and you're adding 5,000-6,000 a year for that value added for the other services you're providing. It's a net loss, and we shouldn't be engaging in net losses when there's a win-win right here when it comes to doing financial planning for a fee. So, like I said, I'm not making any friends. I get that. People are mad, which is good. You're gaining traction with your content when you have people that are upset with it. If you don't have any commentary, that's bad. It means no one cares. B, if you have only positive commentary, that's bad too, because that means you're only appealing to a certain group of people, and that is not a growing audience necessarily. So I like the fact that my content is getting out there enough that I'm getting some arrows thrown at me. That's good. I love it, because at the end of the day, I hate to say it, it's gonna sound cocky. I'm right. The industry is wrong, and the sad thing is, if the industry doesn't change, there's so many people that could use your help, my friends. So many people, but they're not going to come to you because they don't trust you. They don't want to hear a sales pitch, a free portfolio review. They don't want to hear all that. The people out there, they want to hear how you're going to serve their needs for what they need to accomplish with a fair and reasonable fee. And the industry, I know so many people in it are so right, so good, helpful people, but yet the exorbitant fees are alluring. They're alluring, and the big firms, which will go nameless here, they're getting paid big on those exorbitant fees, and they're willing to pay you a good salary to go to these firms with these exorbitant fees. But I'm just telling you, the days are coming with those. That's going to come to a halt. Not for everybody. There'll always be a few. There'll always be a few. But if you're in the business to do financial planning, start doing financial planning. Do it. Get out of the freaking rat race of having to defend your fees, which are indefensible, and get into financial planning. You'll be happier for it. You'll serve more people, and you can still make a good living. Yeah, you're going to make enemies. I get it. But the enemy, like John Bogle, the guy from Fidelity, Mr. Johnson, hated Bogle, hated him. All the investment industries hated Bogle. He made enemies. That's good, because guess who's looked at now, put on the Mount Rushmore of investments? It's John Bogle. Is the guy from Fidelity Johnson? Nope. John Bogle. So he took the arrows. You can take the arrows too, because if the water's warm, there's still few and far between of us in this side of it, and this beach, which is wide open. The water's warm, my friends. Jump in there, man. You'll take some arrows, but you'll find, just like Bogle, they're going to hate you, they hate you, they hate you. They're going to mock you, hate you, hate you, hate you, and then they're going to join you. That's what you can do too. So I hope this helps. I'm willing to take the arrows. You join me, you can take some arrows too, but the fewer and fewer arrows that come our way, because eventually people are going to join us. I will see you.